Portfolio Builder members returned 131% in 2023, and we only trade our portfolio about 4 times, once every 3 months. Buy these stocks now to get rich in 2024 before it's too late. Everything has sold off a little bit this start of the year and is a great entry point today. Click the link below now for a free trial and phone consultation if you're seeing this on YouTube. Here's our high-risk portfolio allocation currently. Now, again, if you're a paid member or sign up for a free trial, you'll gain access to the live membership calculator. Up top, you type in how much money you have to invest, and our software will print out exactly how many shares to buy of each stock. The portfolio is designed to have a defensive section and an offensive section. On the defensive section, we currently have 15 shares of UVXY. That's your crash insurance. 25 shares of TMF, that's betting that interest rates will fall as inflation comes back to normal levels over the next few years, with 25 shares. Then on the offensive side, we have 16 shares of Coinbase, which sold off from 180 to 130, which is a steal of a deal. I see this going to the 300s in the next 2 years. 2 shares of NRGU, that's the big oil and gas companies times 3. With World War III on the brink of breaking out in the Middle East and in Europe, this is almost certainly going to drive oil and gas higher, which makes massive profits for these big oil and gas companies. That's our inflation hedge with NRGU. Then we're long the Bitcoin ETF, GBTC, with 30 shares, and we're long F&GU. These are the big tech companies specializing primarily, a lot of them are in AI, but also has your Tesla, Amazon, Google, Facebook in there. Leverage times 3 with F&GU. So again, this is per unit of investment. One unit costs $6,148. If you calculate, let's say $61,480, it would just increase all these shares by a factor of 10. Again, if you sign up for a free trial, we'll walk you through this. We'll punch in the money you want to invest live with you, screenshot it, and help you get started with a lot of hand holding. But again, all our members get the same results because we follow the exact same ratio of shares. Here's our return last year, 130.86% with a blowout return in November, December of 26.86% and 23%. We started off January a little rough, a little bit of a pullback, 13%. We are not worried at all. All of the forecasts we have for this year, and in fact into next year, are rock solid. And I think we're going to basically just hold this until some of the prices get outrageous and then take some profits. So let's take a look again at the next portfolio we offer, which is a safer one. But again, click the link below if you're on YouTube watching this for a free trial and a phone consultation. We'll punch in how much money you want to invest, send you the screenshot, walk you through it. And if you want to learn more, you can also just call us now at 505-322-7515 and talk to our business partner, Dean Gallagher, the Chief Investment Consultant. Safe growth portfolio allocation. This portfolio is designed to primarily play value bets and has been very successful with low risk. It has a unit cost of $2,120. Currently, you have 2 shares of UVXY, 11 shares of TMF. We're betting on Asia on a falling dollar with EDC at 12 shares. And again, China's just been having a really rough time. So this is certainly a value play, a multi-year value play that should probably have a massive reversal if the dollar begins to fall. We got some interesting charts on that. We're long the Bitcoin ETF, 22 shares of GBTC, and then the oil hedge, a little bit heavier in this portfolio with NRGU. This portfolio returned 15% last year. It had a rough year in 2022, returned 25% in 2021. 2020, it had a 4% return. We were pretty conservative in the pandemic. 2019, a 25% return. And again, this year, down 6%, primarily with bonds and oil both selling off. Now, that's very unusual. We do think those will both correct in the very near term. Here's what's really important. We went from the most aggressive tightening in U.S. Global history in that regard, and now every central bank is essentially either cutting rates, pausing interest rate hikes, or forecasting that they're going to drop interest rates. So this means the money's going to flow into the economy and create another stock market bubble, we believe, in the next 2 years here. The other important thing is the U.S. is running about an 8% debt to GDP ratio. So, uh, as long as inflation's falling and the central banks are going to stop raising rates or even drop rates, you have Goldilocks conditions for stocks, cryptocurrencies, and commodities, as well as bonds. Again, if that inflation comes down now, probably the inflation will be a little sticky because we're running historical levels of debt. This is ensuring that corporations have massive profits and keep employment really high, leading up to the election coming in November. So this is a very bullish setup. We have falling inflation, really high interest rates are likely going to fall, massive government spending. So it's really all you can ask for. What we would be scared of would have been someone trying to balance the budget, but looks pretty clear it'll be Biden, Trump. Both of them love to run massive deficits, and so this is going to be very good for the stocks, regardless of who wins. Here's a look at the latest CPI. You can see it jumped up a little bit. We've had these little bobbles. In general, we believe inflation will fall back towards target, and it's going to take about 2 years to get there. Interest rates should fall. The federal funds rate should fall. And again, once we think this has bottomed out, we can start to get a lot more defensive. But as long as we believe, again, the deficit's going to remain high, employment's going to remain strong, corporations' profits going to remain strong via the deficit, and inflation is going to keep falling. This is the perfect setup. This is a month over month look. So even though we had a little bit of a jump, you can see it's nowhere like the inflation we were seeing from 2020 to 2022. Everything's really subsided and coming down. I guess the biggest risk would be another oil shock. And again, that's why we're hedged with NRG. If oil were to go to, let's say, 100 to 150, or in an extreme case, 150 to 175, this would cause a massive inflation shock globally. It would disrupt the bond market. And we know what happens when the bond market crashes, it resets the value of everything lower because now it makes more sense to lend money rather than to invest in companies. Now, the main reason we're confident that the inflation and CPI is going to fall over the next year is because the BLS is using old data on the cost of rent. So shelter and rent represents about a third of the CPI. And our data shows that the CPI for rent is going to fall for the next 12 to 16 months towards zero. We also see that inflation in Europe, China, Japan is not only falling, it's going negative. So it's quite likely that we're going to hit the target in the next 2 years. And if the central banks aren't careful, they could overshoot it and create a depressionary type environment. And again, we've already seen they've pivoted. They're forecasting rate hikes. The bond market's calling for rates to start falling starting in March, which might be a little early. But in general, we're very, very confident of the outlook here. The U.S. dollar DXY had the infamous death cross, which, if you're a technical analysis type of person, would lead you to believe that we're headed lower on the dollar. We do, again, believe that inflation has peaked and will fall, that interest rates have peaked and they will fall. And again, this is extremely correlated to the dollar. If the dollar begins to fall, watch for Bitcoin to skyrocket up. We're still at this very high level of 102. We believe it could fall towards the 90 to 80 range in the next 2 to 5 years. This is from BlackRock, sending out to all their clients, showing how often Bitcoin has been the best investment of the year. And you can see since 2013, it's been the best investment all but 3 years. The years that it wasn't the best, it was the worst and had some pretty nasty drawdowns. So again, we're looking for some extreme returns in the next 2 years for Bitcoin. And in both portfolios, between Coinbase and GBTC, that's our most concentrated bets to make the most money in the next 2 years. The rest of the portfolio is really designed to protect those positions. Now, here's a cool chart showing what happened when the first gold ETF came live. You can see right out of the gate, it did fall a tiny bit, traded sideways, and then skyrocketed up for a good almost 2 decades now. So again, this is an extremely bullish event for cryptocurrencies, and we are positioned very well at Portfolio Builder to take advantage of that for our clients. Meanwhile, in the Middle East, we have the Houthis and all sorts of terrorists attacking different freight carts. So everybody's starting to reroute freights, and this is increasing costs dramatically. So between that and an oil shock are the primary risk factors we're looking at for inflation to go back up. So we're watching this carefully. So far, again, this is not going to impact the main thing driving inflation down, which is shelter in place, but we're keeping a close eye on it. You can see these container shipping rates skyrocketing here. Hopefully this war will be resolved soon and it doesn't escalate and we don't start attacking Iran's oil refineries. I find that extremely unlikely ahead of an election, but we have been watching this escalate. We've now got Germany, Sweden, many different countries talking about preparing for war. So we are again on high alert for these types of risks to adjust positioning. Now, if you want to learn more and actually get a free phone consultation and a screenshot for you to build out your own portfolio during a free trial, click the link below now to get started or call Dean at 505-322-7515. Okay, now we look at some more data. Here is the 2 and 10-year Treasury curve, looking at the spread. And again, most recessions occur when you go inverted and then skyrocket up, which means long interest rates usually stay stable and the front end of the yield curve crashes, which is expecting essentially a recession and for the Fed to have to cut rates. So again, we're not seeing that. If we zoom into the current, we're nowhere near positive territory. We're still inverted. If this were to see the front end crash while long interest rates remain high, that would tell us to get ready for a stock market crash and then essentially bet on bonds and UVXY and get out of everything else. We could also play the dollar in that scenario. But again, we're nowhere near that point. Right now, we have the front end of the curve sky high, and we have an economy that's too hot. And again, it's too hot because we're spending record amounts of debt to force the economy to be strong. And so again, the TMF is betting on the long end of the bond market, and it's continuing to get pummeled. If we thought there was a recession coming, we see rates falling in general and the front end crashing fast. It's just not happening. So TMF is our bet that the inflation is going to slow and interest rates are going to fall here. And you can see it's just been down over the last year in this chart and the last month in this chart. DXY, the dollar index against primarily the euro, but also a little bit of mix out of the yen and the yuan, staying steady here. So again, if inflation's falling faster in the rest of the world, it's going to keep that dollar strong, which means Americans have more buying power, which is going to in turn bring down our inflation levels. So again, we just see in general, inflation is going to fall globally and drive interest rates lower. At some point, the US inflation will start falling faster than the rest of the world as they bottom out, and that'll cause the dollar to fall. And then again, that's when you see your Bitcoin position skyrocket. Here's a 1-year chart. You can see it's just been trading sideways around this 104 level for the last year. When we had Russia invade Ukraine and create a gas oil crisis, you saw that go way higher. And now the world's reacted to that, and it's just not happening anymore. Here's a look at the treasuries from 3 months all the way to 30 years. And again, you can see the highest interest rates are on the front end of the bond market. That means no recession in sight by the world's smartest, biggest traders in the world. Here's another look at the US yield curve. And again, just showing you the same thing. The highest interest rates are on the front end of the curve, and the cheaper interest rates are on the longer end of the curve. So they're seeing less inflation as time persists, but a very strong economy with lots of inflation in the short term. So again, if we thought there's going to be a stock crash, this would look the exact opposite. Flip it upside down, and you're predicting a stock crash. Here's your 30-year treasury over several decades. You can see it's gone way, way out of range. We believe this will head back towards zero over the next decade and essentially drive debts globally to massive, massive levels. And again, this is all super bullish for stocks and cryptocurrencies in the long run. Here's FNGU. These are the big tech jump giants that had dominated the stock market last year. And you can see its chart, it's topped out. If interest rates are going to fall and the economy is going to go hot, FNGU is about to break out much, much higher. So the dominating monopoly companies are likely going to continue dominating for the next 2 years alongside companies like Coinbase or Bitcoin is in terms of cryptocurrency. Coinbase, big sell-off, massive by the dip. They are the custodian of all these ETFs. They're about to print more money than they ever have made. They're way below their IPO price. This is a excellent buy price to get long Coinbase currently. Here's GBTC. You can see it's just been going straight up for a year with very few pullbacks, and we believe this is going dramatically higher in the next 2 years. Here's EDC. This one's going to do good if bonds are going up, TMF, and the dollar's going down. And again, because of this sticky inflation, it's been stuck. It's been stuck sideways. China's getting ready to print money, fill their economy back up, but they can't get away with it until the dollar's not so strong. Otherwise, it'll collapse their currency and bond markets. Here's oil, just basically trading sideways over the last 5 years. But you can see in the 2022 2023 period, we had that spike towards 125, which caused a global inflation problem and collapsed bond markets everywhere. Again, unless we start bombing Iran, I don't see that happening again. In the last year, we can see oil's just been falling. I do think it's pretty much bottomed out here. Demand is very strong. It's likely going to grow as interest rates fall and the economy heats back up. So it's a critical hedge to be long NRGU. Here's the NRGU ETN. Again, it's 3 times leveraged, gives you a lot of bang for your buck. You essentially own the big oil and gas companies, leverage times 3, and again, it's the top 10. So it's a great play to make the most out of your money to hedge you against an oil shock. We're not long gold, but we're looking at it. And again, you can see it's just been in a very strong uptrend ever since that ETF came out. Silver trading sideways here, not quite falling. Gold towards new all-time highs. Here's our crash insurance. The market makers have been crushing UVXY as a way to pump the stock market up. We've got this phenomenon of 0-day call options reaching record amounts of volume, and this is causing the stock market to continue bubbling up. We see no reason that this will change unless inflation comes back really hot. We see essentially a labor shortage, rising wages, oil, gas going back up, rent going back up, housing shortages, things of that nature, more supply chain disruptions from these various wars, then we might get more worried about a crash. Right now, we're not worried currently. The banking crisis seems to be resolved with KRE. We're watching that. Bottomed out around 38 and at 49 here. So again, we don't want all the regional banks to collapse. We had a bunch of banks collapse last year. It seems this has been contained for the time being. And again, if the value of the long duration bonds goes up, a lot of these banks are going to be back in the green. Many of them are carrying huge losses, which the Fed has helped them basically take a loan against their debt that they've bought against mortgage-backed securities and treasuries. And they're able to get the full par value, even though they're down anywhere from 20 to 30%. So this has really saved these banks temporarily and keeping them solvent. And that's why we see this nice bounce back there. Here's the S&P 500. Get ready for it to break to new highs in the very short term. And the same thing for the NASDAQ. Russell 2000's been a bit boring. We'd love to see the Russell 2000 carry through to believe we have a strong bull market ahead. But so far it's been a boring sideways play or even down for much of the last year. This chart, we're looking at consumer spending continue to rise. Retail sales, again, strong. We had some record sales days with holiday sales last year. So the consumer remains very strong and has a lot of money parked away. There's about $6 trillion globally in money market funds collecting 5.5% right now, just to give you an idea of how much money could flood into these different markets. Loans and leases in bank credit continue to grow. So again, the banking sector looks healthy. Consumer credit is growing rapidly, again, showing the consumer is borrowing and spending, no collapse in credit change. Balance of trade is slowly getting a little bit smaller, which is good. That's showing a strong U.S. economy that's slowing down a little bit, but not a lot. China's PMI is back above 50 after going sub 50. Their imports are rising again. Their exports are rising again. So everything's looked pretty good. We're very confident in the current positioning. And if you'd like to learn more, call Dean now at 505-322-7515. So go ahead and look at any questions. Nick says, do we need to make any adjustments? No, the trade alert says no changes. Sit back, relax, don't change a thing. Okay, very good, guys. So we will be back next week, same place, same time. If you do have any questions, reply to your trade alert email. That goes right to me, and I'll respond to you right away. If you're catching the replay on YouTube, just click the link below to start your free trial or call Dean at 505-322-7515. We'll walk you through the entire trade alert and even give you a free trade alert screenshot. Okay, Gary says, what's your read as far as Coinbase lawsuit? Yeah, I was listening to that live today for part of the day. And the SEC just keeps losing left and right. And the judge was saying, well, the way you're looking at some of these coins, uh, we could call Beanie Babies securities the way you're describing them. So yeah, I think we're looking really good. The arguments are very well made by the legal team for Coinbase. I think Coinbase is going to win. Any concern on BRICS? No, I mean the dollar's still at 104. So yeah, I think 50 years from now, perhaps there could be a change of a superpower. But yeah, who's more powerful than the U.S.? Nobody, not even close. China makes a bunch of cheap ships that can barely make it off their coast. The U.S. completely dominates the sea and the sky. Can we lose these silly wars where we're fighting in deserts and forests and such? Sure, but perhaps that, maybe they weren't even trying to win those wars. They're just trying to export as much U.S. government debt to private contractors and keep these wars going as long as they can. So yeah, I don't really see any true threat. Russia, which had the second largest military in the world, couldn't even take over Ukraine. Um, and again, we haven't even had to deploy U.S. Troops over there currently. So yeah, not worried about the U.S. dominance at this point in any way. And I'm not a big war fan, to be clear, but as far as world dominance, U.S. definitely still triumphant in that regard. So yeah, dollar is still king. It looks like the U.S. is trying to really destabilize basically China, Russia, and Iran, and get a big base in Middle East, partnered with Saudi Arabia, and control more of the oil. Yeah, so Joseph, I would just look at the share price. All the ETFs trading Bitcoin are going to just trade exactly the same because they're just trying to match the price of Bitcoin. There's no real discount in any of them now. And that's the way ETFs work. That's why GBTC was such a crime that the SEC blocked them from converting years ago, because it's either trading way above the value of Bitcoin compared to the assets they held or way below. So there's this premium or discount at any time. As an ETF, they're able to exactly track the underlying asset. So whether the shares cost $1 or $10 or $100, that doesn't affect the return you're going to make on them. Now, where you could look for some opportunity would be Coinbase is the only one I really see, or the miners. Maybe the miners have been discounted a bit. MicroStrategy, I'm not a big fan of because it's trading something like 3 times the value of its assets. That's why Michael Saylor's dumping a bunch, like $300 million worth of it to buy the real asset because he knows they're triple valued. But yeah, I'd either do Coinbase or any of the ETFs. They're all exactly the same. GBTC probably has a little bit higher fees than the rest, but we're already long that. I don't want to make everybody realize a gain for no reason over a 0.7% difference on the management fee. So yeah, I see us hitting a peak in crypto around the end of next year, just based on market cycles, inflation cycles, and bond cycles. And that's just a short-term top. I do like ETH. I would say ETH and Coinbase are very similar in how they could perform. But yeah, we're not with these portfolios, we're playing the biggest assets with the least risk, or the best risk to reward. Now, if you do want exposure to Ethereum, we have a private equity fund that leverages you into Ethereum. It also buys the different applications being designed on Ethereum, and it also does airdrops. So there's a ton of money to be made, and we're doing that with our private equity product. That's only available to Portfolio Builder members that are paid, and you can learn more about that at 505-322-7515. It also has a weekly dividend for retirement income. So again, that's something Dean will teach you about. Okay, free trial guest says, what's the impact of Coinbase at Grayscale moving 1.3 billion in Bitcoin into Coinbase Prime wallets? Uh, well, yeah, so Coinbase is just going to make a shitload of money from holding the assets for all these ETF managers. So yeah, they are printing money. They reduce their costs, increase profits. All their fundamentals are just beautiful. And if you look forward, so long, we're seeing record amounts of volume already going through these ETFs. So this is just, meanwhile, who's Coinbase's competition? Binance just got shut down. CEOs in custody, probably going to go to jail for a little bit. And their primary competitor, Binance, was essentially doing money laundering for terrorists globally. So that's cut off. So Binance is probably going to lose a lot of its volume. So your only other competitors are Gemini and Kraken, and the size of those compared to Coinbase are just tiny, and they don't have the deals with ETFs. So Coinbase is really the premier onboarding, offboarding company of the globe for cryptocurrencies. And this market could easily grow from 1 trillion to 10 trillion in the next 5 to 10 years. So Coinbase could be trading 300, 500, 700 bucks easy. It's definitely one of my favorite picks. And my career of doing this service, I've only had 2 individual stock picks. The other one was Moderna, before everybody knew what Moderna was, and before the virus had spread all over the U.S. And we made a ton of money on that. So I don't often bet on individual companies unless I have extreme conviction on them. So yeah, I think we'll at least double, if not triple, our money on Coinbase before I give you a sell alert here, and probably by next year. Oh, well, hey, Bill, good to hear from you again. Yeah, probably just got the trial link instead of the member link. Okay, very good. So yeah, again, I don't like to trade much. We had a killer return last year, did very few trades. We had a lot of boring weeks and months where we either traded down or flat, but we stuck to the plan. We had high conviction in the outcomes, and we made a lot of money. And that's the plan this year also. So hang on to your horses, and we'll be back next week, same place, same time. Thank you guys so much for joining live. If you have extra questions, shoot them over via email, and I'll get back to you right away.